While many young investors chase the next big thing in tech or crypto, a surprising number are turning to gold. Yes, that timeless, tangible asset your grandparents probably owned. In 2025, it's making a comeback with a digital-first generation, not for nostalgia, but as a strategic move in a chaotic world. So, what do they know that you might be missing? Why are Gen Z and millennials flocking to gold, and what does it mean for your financial future? The world our parents invested in is gone. We've grown up with non-stop crisis, the 2008 meltdown, a global pandemic, and constant turmoil. This reality has forged a new, skeptical investor. There's a growing distrust in the traditional financial systems that have repeatedly shown their cracks. This has led to a powerful shift. Young people are searching for assets outside of government and central bank control, leading them straight to gold, the original store of value. Chapter number 1. The modern case for an ancient asset. You might think gold is just for doomsday preppers, but the numbers tell a different story. In 2025, gold prices have surged, hitting record highs past $2,400 an ounce, one of its strongest performances in recent memory. So why the sudden interest? First driver is inflation. We all feel it. When your cash loses purchasing power, you look for something that holds its value. Historically, gold has been a classic hedge against inflation, protecting wealth when currencies are devalued. The second driver is market instability. Young investors who rode the meme stock and crypto roller coasters learned a hard lesson about volatility. After that chaos, the appeal of a stable, tangible asset is clear. Gold acts as a shock absorber for your portfolio, a sleep-well asset that brings peace of mind when markets are in turmoil. It provides crucial balance during downturns because it doesn't always move in lockstep with stocks. Finally, there's the de-dollarization trend. In simply, central banks worldwide are buying gold at a record pace to diversify their reserves away from the US dollar. When the world's largest financial institutions are stocking up on gold, it sends a powerful signal about the global economy's future. For young investors, it's a vote of no confidence in the systems they've inherited. Chapter number 2. The digital gold rush. Investing in the 21st century. If uncertainty is the why, technology is the how. The old image of locking gold bars in a vault is outdated. Today's gold rush is happening on our smartphones. Fintech apps have torn down the old barriers, making gold investing accessible 24/7. The biggest game changer is fractional ownership. You no longer need thousands of dollars. You can start with just a few bucks, buying tiny fractions of a gold bar and building your holdings over time. These platforms are built for a tech-savvy generation. You can set up automated investment plans to buy a small amount of gold regularly, removing the stress of timing the market. The gold you buy is real and physically held in secure, insured vaults, combining tangible security with digital convenience. This digital shift also appeals to core values. Some platforms offer responsibly sourced gold with transparent supply chains. And in a fascinating twist, many young investors don't see gold and crypto as rivals, but as complements. They use crypto for its growth potential and gold for its stability, a 1-2 punch to hedge against crypto's wild volatility. Chapter number 3. Your Golden Nest Egg, a beginner's how-to guide. So, how can you start investing in gold? Let's break down the beginner's guide. First, decide on the form. You have 3 main paths. Path number 1, physical gold. This means buying actual bars or coins. The appeal is holding a tangible asset. What is the downside? You're responsible for secure storage and insurance, and premiums over the market price can be higher. Path number 2, digital gold. The most popular option today. You buy gold through an app, owning a share of a real bar stored securely for you. It's accessible, the entry cost is low, and you don't have to worry about storage. You can sell instantly or even have it delivered. Path number 3, gold ETFs. These are funds you trade like stocks. Some ETFs track the price of gold by holding physical bullion, while others invest in gold mining companies. This is a liquid, low-cost way to get exposure through a standard brokerage account. After choosing the type, your next step is to pick a trusted dealer or platform. Do your homework. So, look for a solid track record, transparent pricing, and positive reviews. Most importantly, start small and be consistent. Don't dump your life savings into gold. Financial advisors often suggest a 5% to 10% allocation for diversification. Build your position gradually using automated plans, a strategy known as dollar-cost averaging, to smooth out price swings. Finally, understand the fees. Every investment has costs, like premiums, storage fees, or ETF expense ratios. Factor these into your decisions. This shift to gold shows a generation blending timeless wisdom with modern tech to control its financial destiny. What's your take? Are you investing in gold, or do you think it's an outdated relic? Let me know in the comments. And if you found this valuable, please hit the like button and subscribe. The conclusion: young investors are flocking to gold for logical reasons, as a safe haven from inflation and volatility made accessible by new technology. It's no longer a symbol of the past, but a tool for the future. Whether physical, digital, or an ETF, the principle is the same in a world of digital promises. There's security in owning something real.